All right. Be mindful of time. I suggest we get started. My name is Ryan. I lead the offshore wind commercial team within Esgian Offshore Wind. I see clients that have logged on here. I see names that are recognized, but also many new names. So first and foremost, I want to thank everyone for attending today. And for those of you that do not know who Esgian is, we're headquartered in Oslo, Norway, and we're a market intelligence and data analysis firm for the ocean industries. We operate in three verticals. That's offshore rigs, shipping, and offshore wind. My focus being 100% offshore wind, and today we speak on offshore wind, obviously. As some of you know, each month we host a short and timely topic that covers a relevant offshore wind topic. We do our very best to keep these at the third Thursday of every month, and we keep these to 19 minutes, and we do that on purpose. We understand everyone's time is precious, and we want to provide you with the highest quality information in a very short period of time. And if you haven't already, I do encourage you to follow SGN Offshore Wind on LinkedIn, sign up for our newsletter to be kept up to date on all future events, news, and our quarterly reports. Recently, on our website, we released a free interactive offshore wind map. I do encourage everyone to go to our website to check this new interactive map out. For those of you that don't know, within SGN Offshore Wind, we offer an award-winning subscription-based digital platform that provides transparency and clarity into the global offshore wind market. Our clients are developers, companies within the supply chain, vessel operators, consultancies, and more. And we're primarily helping our clients with business development, competitive and strategic analysis with data in near real time. We're actually updating the platform on average over 50 times per day. But today's topic is one of my favorites. It's our quarterly update. And during these next 19 minutes, we'll highlight the previous quarter's activity and trends. And as we dive into the update, you will see the activity levels picked up pace in terms of contracts awarded, and we saw the Q3 allocation rounds strengthening the long-term pipeline. However, these events did take place under a degree of caution, with a reduced risk appetite from some developers taking on new pricey ventures. As we dive into this update in the next 19 minutes, I do want to emphasize that all the information covered today has been sourced from our Wind Analytics digital platform. There is a Q&A section at the top. If you have questions, please type them in the top. We will get to them at the end of the discussion. And with that being said, I'd like to hand it over to Oliver, who leads our offshore wind team. And with that being said, Oliver, why don't you take it away?
Perfect. Thank you very much, Ryan. Hi, everyone. Nice to be back with you again. As always on this version of the monthly webinar, the intention is to take a view of the trailing last 3 months, the quarterly update, step back a little bit, offer some reflections on what we have seen in that last 3-month period, and then give you a quick hint at what we think might be happening around the corner, what might come in the months ahead as well. So that's where we are with this regular quarterly update. Let's just shift through onto the next one for you. Okay, so we've got 5 slides to go through. Keep it nice and brief and punchy for you. If we start with slide number 1, here we're looking at the offshore wind global pipeline, and we saw a slight reduction in the 3rd quarter in comparison to the 2nd quarter. Worth highlighting here because this is the first time that we've seen that dip in the pipeline for offshore wind projects. And the difference here, why we saw that slight dip, is largely due to what was happening in the US and the US lease rounds. Namely, there are 2 rounds that were cancelled. The second Gulf of Mexico process, and then Pacific 2, which is really around the lease areas in Oregon. And we therefore removed that capacity from the category that we have here as scheduled for auction. That really explains that dip down that we saw. In last quarter's outlook, we did say that although the year got off to quite a slow start, we were fully expecting that momentum would gather pace as we moved into the latter half of 2024. And I'm glad to say that we weren't too wrong with that expectation. And the headline, as Ryan mentioned, for this quarter was that activity levels in the data definitely picked up pace in terms of new contract awards. And that's contract awards across most of the key components that we're tracking. And this was led largely by European projects moving through FID and into contract awards, projects such as Inch Cape, Aranja Wind, and then Baltic 2 and Baltic 3 as well. Q3 also saw a strengthening of the long-term pipeline in terms of both subsidy contracts and then new project areas being awarded. However, as Ryan mentioned, these events took place under some degree of caution in the market, with a bit of a reduced risk appetite from developers. I think one way to look at this is that it's something of a more guarded environment. And this really in terms of developers taking on new and potentially, arguably, pricier ventures. And what does that mean for us? Well, as we look ahead, these lower levels of interest starting to cast a little bit of doubt on what we now expect to see in the last 2.5 months of what's left of 2024. And with this increased uncertainty, we're now suggesting that the final quarter of 2024 might actually be a little bit weaker than we were anticipating earlier on this year. So in real terms, this means we should expect to see some auctions being delayed, maybe expect some volumes being smaller than initially advertised, and then expect some FIDs to be moved out further into the future. So certainly not a negative outlook, but slightly more cautious in what we're expecting. So given that backdrop, let's move on to the second aspect we want to cover this afternoon, and look at lease rounds. Now, worth pointing out here that we will provide a lot more detail in next month's webinar in November, when we'll do our quarterly deeper dive into the world of lease rounds, the world of auctions. Having got that plug out there ahead of time, today I'll nevertheless provide some headlines for what we saw in Q3. And now, as a reminder here, what we're looking at on this chart's showing the cumulative year-to-date megawatts awarded by each quarter. And we use this to really track both the direction and the speed of travel as we're moving through the year in terms of leasing activity. So Q3 again saw high levels of activity for new project areas being awarded. In Q3, we saw 16 gigawatts being awarded by host governments. And this followed a very, very busy Q2 and brings the total so far in 2024 up to a very impressive 55.2 gigawatts. Now, worth noting that doesn't exclude China in these figures. We are expecting additional capacity to be awarded in Q4, but I would definitely note that that full year Q4 number, or the full year number, is dependent in Q4 on the success of the round to be held in the US in Maine on the East Coast. That's really what we're looking at to drive that full year number now. Europe was reasonably active in the quarter with a successful CFD round, giving a very much needed vital boost for projects in the UK. And Germany saw what we feel is the challenges of attracting investors under quite difficult market conditions. So turning to the UK, the announcement of the results of allocation round 6, where CFD contracts were awarded, sent clear signals for a strong new push for projects in the UK, particularly important after no projects were awarded in last year's allocation round 5. Looking even further ahead here, importantly in the quarter, the Crown Estate also started to look at new areas for future rounds in the UK beyond the Celtic Sea round. aiming to award up to 20 or maybe even 30 gigawatts of new project areas as we go towards 2030. And we're closely watching that process for more details that will give us that longer term clarity that we already see in some other European countries. In Germany, the authorities awarded 3 sites to developers during the third quarter. Total capacity here was 5.5 gigawatts, all of it fixed foundations. 2 of those 3 sites were won by RWE, which has since been joined by Total Energies, and 1 was won by Luxcara. I think it's fair to say that the round gained less attraction from developers than last year's German rounds, less participation and lower financial bids. For us, this ties into a larger trend that we've seen in Europe over the last 12 months or so, with developers much less willing to take on new projects, more focused instead on maturing their existing portfolio or exiting markets that they deem to be too risky or non-core. Switching to the US, BOEM hosted an allocation round for 2 sites in the Central Atlantic area. Here, the combined capacity that was awarded was 6.3 gigawatts. This was the first round to award new projects on the US East Coast after what was clearly a difficult 2023. Winners here were Equinor and Dominion Energy. As I mentioned earlier, elsewhere, the Oregon floating areas have been met with considerable local resistance, and largely because only one of the 5 originally qualified developers had expressed a clear interest in taking part in that process. On the 27th of September, right at the end of the third quarter, BOEM announced a decision to postpone that Oregon round. Importantly, no new date has yet been given. As I said, we're pretty heavily weighted globally to what happens in the US in the final quarter of the year. And the main round is still planned to be hosted at the end of this month. We wait and watch that one very carefully to see what happens. And lastly, if we turn to Asia, start with India. India launched its second offshore wind allocation round in Q3 of 2024. This one for 500 megawatts, quite a small site, fixed foundations in Gujarat. Interestingly, the site will be part of what they're calling a viable gap fund, a VGF support scheme, which the government is allocating to bolster the build out of their first offshore wind projects in that country. So reasonable level of financial support given. Here, the timeline is that developers have until December the 10th to submit those bids for the Gujarat 0.5 gigawatt project site. Elsewhere in New Zealand, clearly a new market, authorities revealed a plan in the last quarter where they're proposing to award sites to projects. That award is looking like it may take place at the end of 2025, the end of next year. Although it's clearly a market in very, very early stages at the moment, we are tracking it carefully. Several developers are already pretty present with well-developed project proposals here. We look at companies like CIP, Blue Float Energy, but there are a number of other companies that have projects in the pipeline for where we expect those awards to be made. But very early stages there, may see progress as we go through into 2025. In Taiwan, we saw the results from the 3.2 round being officially confirmed, and they awarded 5 project sites to developers. We've spoken about this at length previously, but this was really the official confirmation of that process, even though we already knew by and large what the outcome would be. Just to reiterate the key headlines there, it was the Taiwanese domestic companies that took some of the bigger wins there, securing 3 of the projects, 3 of those 5. While Ørsted, although it was listed as qualified, missed out in that final assessment because their projects were overlapping with some of the other winners. In total, in that 3.2 round, we did see 2.7 gigawatts being confirmed as awarded. And lastly on this, for the time being, in the leasing area. In Australia, we had the results from the Southern Ocean area process being announced. And here we saw the award of a preliminary feasibility license to just one project, that was Spinifex, which will be developed by Jura Next, the former Parkwind entity, together with domestic Australian company Alinta Energy. Elsewhere in Australia, the authorities also declared the Bunbury area, which is offshore Western Australia, as a new offshore wind zone, getting that confirmed. That at the moment is a potential area, or is an area of potentially 11.4 gigawatts, and is the fifth zone that the Australian authorities have designated. In terms of timeline on Bunbury, the area has applications open until the start of November, and again, we're expecting the results to come through next year with the winners of that area in Australia. So you can see from that, extremely active in terms of the volumes both being announced and also building out, looking forward into 2025. So let's take a look at where we've seen other activity in terms of contracts. Start with vessel contracts. Vessel contracts saw less activity in the third quarter, only 3 new contracts being announced, but we did see several previously announced contracts getting that final confirmation and giving a bit more confidence to the market. It's worth pointing out we expect a similar pattern going forward, and this is largely due to developers opting for longer-term reservation agreements with vessel owners as opposed to individual contracts. We saw a bit more activity on the equipment side of contracting in the third quarter. 11 new contracts announced, which in major areas, major components, and that compares with the 8 that we saw in the second quarter. As expected, the number of those equipment contracts was an uptick in the second half of 2024. A number of those being provisional contracts being converted to firm orders as projects reach FID, particularly for some of the projects in Equinor's portfolio in Poland and the US in particular. We continue to look at a steady pace of equipment and vessel contracts being announced as we go into Q4, and within that, the possible typical regular end-of-year rush that we get as contracts tend to be back-end weighted for the final month of the year. And finally, and it's certainly worth pointing out, in the core turbine market segment, which everyone always looks at as a benchmark for wider activity, very clear here that Vestas was continuing to grow its market share at the expense of its close competitors. And also worth highlighting, something that's been much discussed by us and by others in the market, is Mingyang taking its first larger scale turbine contract in Europe. Lots of discussion around the perceived threat of the growing presence of the Chinese supply chain elsewhere in the world. Good progress in terms of installation activity, getting into the real nitty-gritty of building out capacity. So we have seen good progress with high levels of efficiency from those particular projects. Here we'd call out projects like Baltic Eagle, which has now completed its turbine installation, Haytright, which has finished its foundation installation, other projects that are progressing actually pretty well now, Borkum Riffgrund 3 and Dogger Bank B. And you can see on this slide a new chart that we've put together for this version of that quarterly report that subscribers do receive. First time that we're using the data that you can all find on the Wind Analytics platform that's available for all regions here. Just selected Europe because of the sheer number of projects that are underway at the moment in Europe. The idea of this chart is to give you a sense of how fast or otherwise the projects are progressing through their installation phases, how much of a percentage of both turbines and foundations have actually been installed on those projects. As we look a bit deeper into the rest of Q4, we're expecting a total of just under 17 gigawatts of capacity that's either undergoing foundation or undergoing turbine installation. So a huge volume of projects that are being put in the ground. The bulk of that does remain in Europe, but it's worth noting that we do also have pretty substantial campaigns underway now in both the US and across multiple countries in Asia. Last slide for today. Out of the 5 that we like to give you, this one a little bit different. We don't often talk directly about the maintenance segment of the market, but I certainly felt it was worth a brief consideration this quarter. Some interesting things happening. We tracked some 39 different maintenance operations in the third quarter of the year, slightly up compared to the second quarter. So 39 is 2 more than we saw in the second quarter. And that was 130 different individual turbines being serviced. Importantly, that work was being done by 12 vessels being contracted on site for that maintenance work. If we start to dive into the data in a bit more detail, we can see that in terms of those key contract information, Siemens Gamesa has the largest installed base of turbines, the most operational turbines globally, and logically, therefore, as you would expect, the highest number of turbines being serviced. But only about 2.3% of its total operational turbines in Europe were visited by these vessels in the third quarter. And interestingly, that was mostly, as you would expect, that older models that were subject to that maintenance intervention. If we look at the number one competitor, Vestas had approximately 1% of its total number of turbines serviced in that quarter. But for Vestas, we saw that it was mostly its newer models that were being visited in that third quarter. So a little bit different in terms of trends. We are tracking this market with individual vessels as well, if you want that perspective of what's happening. Interesting for us here was that as Seaway Ventus wrapped up its work on Borkum 3 on the installation phase, pretty quickly then went on to work on Walney extension for some maintenance work. This is the first time we've seen that vessel do any maintenance work since it was delivered from the yard. Worth also pointing out that at the very end of the quarter, some major corporate news came out in the maintenance market with the announcement that Macquarie Asset Management had entered an agreement to buy 100% of Zyton, probably the largest vessel company in this sector. So pretty big corporate news flow as we got to the very, very end of that quarter. So there you go. That's our top 5 takeaways for the third quarter. Just to conclude and bring it all together, we felt it was a strong quarter from many angles, but we're somewhat more cautious than we were previously with regard to the end of the year, in particular when we're watching upcoming lease processes. And that's something that I'm sure we'll cover in much more detail in next month's webinar, which, as I mentioned, will be dedicated to that topic in 1 month from now. So with that, let me hand things back to you, Ryan.
Excellent. Yeah, thank you, Oliver. That's obviously a ton of information that you just went through in a very, very short period of time. So thank you very much. If there are questions, please type them into the Q&A section at the top. But while we wait for any questions, I do want to touch on a few householding items and additional items here. You see the QR codes for the mailing list and LinkedIn right there. Please follow us. Also check out our interactive mapping, free mapping feature on our website, which I mentioned in the beginning. One of the things I do want to mention as well is that our team at the end of November will be in Amsterdam for the OEEC Wind Conference. We're already starting to plan and have booked up some meetings for that conference. If you will be in attendance and would like to meet in person, please, I do encourage you to reach out. We would love to say hi to everyone in person. Let's see if there's any questions real quick. Doesn't look like anything's coming through, but I do encourage you to reach out directly with questions. And lastly, as Oliver alluded to, we will have next month's webinar focusing on auction rounds and leases. So we look forward to seeing you next month and hope everyone found today beneficial. Thank you very much. Have a great day, everyone. Bye-bye.
Bye. Thank you.